Well, hello there, my friends. Chris Marcus here with you for Arcadia Economics on Monday, April 17th. As we open up another week of trading in the gold and silver and financial markets. And fortunately, to join me as always on our Monday show is Vince Lanci of the Gold Fix Substack and quite a valued contributor of Arcadia Economics. Been great having you on the Monday show, Vince, especially today where we have gold and silver selling off. They did hit their highs of the year recently. Gold well over $2,000 an ounce. Silver getting over 26 bucks an ounce as late as last week. And we've had a sell-off the last couple of days, which we will dig into and talk about that and some of the other recent gold and silver developments. But of course, before we get started, as always, how are you doing today, my friend?
Doing good. Nice to see you again, Chris. Good to be here. Good to see everyone in the chat too.
Well, pleasure to have you here as always. And I'm going to pull up the gold and silver charts. Here we have gold, again, as you can see, got up to just over 2060 last week. Yep. This is the futures chart, and we have $2,005 per ounce today. And taking a look at silver, which got over $26 last week, right around the $25 level today. So Vince, curious, as you're looking and trading these markets each day, is this just a natural correction to be expected after quite a significant rally that we've had going all the way back to September, rallied earlier this year, sold off as we had more Fed hikes priced in? Still have the hikes priced in, although of course the concerns in the banking sector led to a new leg of the rally, and perhaps we could start there with where you see things as they stand today.
Well, if you remember a couple of weeks, we talked about 2050 and starting with gold, 2050 as a big area for the banks. They had been talking about it, and the market had stopped at 2049 for a couple of weeks, and then we had that close of quarter all-time high for gold. And I wrote a post saying above 2050 the gamblers will enter, and that's what happened. A couple days into the cycle, you tested 2050 and then you broke it. What I mean by gamblers, and this is a big problem for silver right now, not the gambling, the gold gambling. Above 2050, you had these speculative momentum type of funds get stopped in. So it's kind of like, call me if it gets above 2050, I'm going to buy it, right? Or I'm going to buy a dip. Gets above 2050. The market has a very high volume spike over a couple of days between 2050 and 2060, as you pointed out. And then the week ends and everyone has time to digest it. Everyone realizes that all the speculative buying that had been waiting on the sidelines just got stopped in, because that's where the banks said that they had to buy. That's where they bought. The banks gave it to them and the market came off. Now, what does this have to do with silver on its own? Well, in precious metals in general, that's a sign of a short-term top. And to speak to your comment about is it business as usual, or is it something more to worry about? It's business as usual, and I'll give you the caveat in a second. We'll see later on when we go through the other charts that you have, that right now I'm talking about the paper market. I'm not talking about physical market. We'll talk about physical as well. But right now, everyone wants gold. Okay, when I'm saying speculative, inflation fears, it's a four-letter word. It's easier to say, and the mentality of the American, and I'm talking about the American investor is, I don't want one size that fits all. I want a silver bullet. Ugh, bad analogy, good analogy actually. They want the cure-all. Oh, I want gold. Like, they don't understand that silver fixes everything. So they go with gold, and that's what their salesman tells them to, and they buy it. And so you have this awakening for inflation and bank fears, insolvency fears. And so they go, I want to put it into precious metals, put it in gold. And then gold rallies. By the way, this is very, very good in a macro way. When gold leads a market higher, that's because they're buying it to buy precious metals. When silver leads, that's because they're buying for momentum or alpha. Right now, as a result of all this, of this rally, of this overbought situation, silver is getting dragged down with gold. It was not moving as strongly higher with gold in the last, say, 2 weeks, right? Last month. And so it's going to be dragged down, but it won't be oversold like gold will be. Here's what I mean by that. If you look at we're talking about the speculators now, not holders or investors like we are, but I speculate as well. The gold market at this price should have X millions of dollars in it by speculators. They allocate a certain amount of money. Well, they're 20% bigger than they normally are. They're getting a little greedy. And so because there are too many of them long, they're stretched too thin, their credit cards are maxed out, they're going to sell a lot quicker. And that will take silver down. Now, the reason that's not bad is because nobody is buying copper right now as an industrial metal. So silver's doing quite well, considering that people think the economy is in a recession, et cetera, et cetera. So gold is overbought, not silver. Silver will suffer as a result of that. That's on paper. The commitment of traders confirms that. The price action confirms that. And the physical confirms that as well, in a sense that silver is a two-tiered market now. There's the paper market, futures, and there's the physical market. And that's rhetoric you probably hear from a lot of people come on here. But I made a purchase last week or 2 weeks ago almost, and there's a real delay. So while the price is coming down, there's a delay to getting filled on a purchase that I had last week. So the proof is in the pudding there. I mean, there's a rush into these things, and futures are mattering much less than they used to. So that's my take on the week.
Yeah, certainly there has been quite a surge across the bullion dealers. We've seen a couple of the dealers make minimum orders of $250 or $500 just because they're having a difficult time keeping up with the retail demand, which again, as you quite astutely mentioned, is a bit different from what's happening in the paper market. Do you expect the retail demand to overtake the paper market at some point? And also, I guess along with that, $30 has seemed to be a bit of a line in the sand for silver over the past couple of years. It's gotten very close to that, broke over that briefly during the silver squeeze weekend, couple of days. Is that what you're looking to as a true breakout in the silver market?
I think I don't think retail, and I'll be very conservative here. Retail is the reason that silver is going to basically go to $50, but it won't be the trigger. The trigger will be silver dealers that are closing. The trigger will be monetary policy. The trigger will be a sovereign wealth fund announcing. But people like us buying have established a baseline. And that baseline has moved higher over the last 2 years. And it's working, if you want to look at it that way. In terms of a breakout, $30 really does matter. And I'll tell you why. It didn't matter to me before. It did not matter to me at all before. I was of the opinion 18 to 22 was a range, then above 22 to 26. And I said, I don't know. But then when we broke 30 and it attracted all that attention, and I don't just mean attention from us, I mean attention from regulators, kind of got a little scared and used words like temp. That's the video that you showed me when we first met. I'm like, yeah, that's right. They got a little bit freaked out on that. And so now, while $30 meant nothing to me 3 years ago, $30, they don't want to see the 3 handle on silver, just like they don't want to see the 2 handle on gold. Well, now we got the 2 handle on gold. So when the 3 handle on silver comes, let's see what happens there. So I do think that if you get above $30 in silver, you change the vibe is a bad word, but I want to use it. You change the vibe because you're no longer putting a 1 in, like It's not, where's gold? 16, 17, 18, 19, 2000. It's been there before, but silver hasn't been above 30 in years, except for a brief moment before JP Morgan announced that European miners were not good to own, right? That was like during European time.
On that one.
How does that work, right, Chris? It's like, okay, so silver's skyrocketing. How can we, well, we're going to sell it on European time when no one's looking. How can we make it even worse? Oh, let's just say that the miners suck. And that's what happened. So we know how they're going to come at us, but we don't care because we're not trading leveraged paper. Well, I am trading leveraged paper, but I'm an owner as well. So $30, I'm just, long story short, yeah, 2 years ago, it would have been like $30. Who cares? Guess what? $30 matters. They freaked out before. They're ready for it again. Sure.
Perhaps similar to gold above $2,000. Now, I know you just mentioned that since we have seen that before, there's some degree to which people are like, oh, well, we've been there. Although it certainly seems like there's been a lot more attention just in the past couple of weeks, seeing gold above $2,000. So some bit of marketing, if you want to call it there, which I imagine we might see at silver. Another silver question, though, for you. Looking at the COMEX warehouse stocks again, 2 years ago, up above right around 150 million ounces, then was pretty steadily declining, got into that mid 30s range, which is where it stayed since, let's call it November. And again, a similar pattern here is the LBMA holdings, which we saw, again, drop pretty consistently and has stayed flat for the last couple of months. At the same time, the buying from India has slowed down, which was set a record last year, has been pretty low, almost non-existent so far going into 2023. But any thoughts on that change we've seen in the pattern of the inventories over the last couple of months?
Yeah. The first thing is I used to pay very, very close attention to this. I'm not going to say I don't anymore, but I'm going to say that I have lost my faith or belief in the validity of the day-to-day, week-to-week numbers. And that doesn't mean I don't look at them. It just means I discount them. It's almost, for me, right? I'm a little bit jaded here. It's almost like, unless I have a position on in silver and gold, a speculative position, I don't care about the day-to-day price. I'm at that point in my life where it's like, yeah, who cares? It doesn't mean anything. I actually believe what the kids say. It's true. It's like, yeah, I don't care about the price. I mean, especially when coins are trading 80% over spot. But to put a relevant point on that, I don't know if you can go back this far, but what's changed is that when the silver stocks go down in the past, in the COMEX, the LBMA stocks go up. So it used to be basically EFP trades from one delivery point to another, COMEX, and then we had that problem in 2000 with the bar size, and you had all the silver that was in and gold that was in the LBMA got arbitraged against the U.S., and that's how we got filled up. But in this drawdown that started approximately 21, when it started accelerating, say midway in 21, and then just became relentless as 22 started. What we're seeing is remember, the COMEX is a bar in one form, and the LME is the LBMA is a bar in another form, and most of the physical global demand is there. And if the rest of the world is buying it, they're buying it from the LBMA, and the LBMA banks will arbitrage it by buying COMEX silver, and it flips back and forth. But now the COMEX silver is leaving the COMEX. It had left the COMEX, gone to London, and now poof, now it's out of London too. So that's your Indian demand that you talked about. That's your Indian demand. I believe Russia's been a buyer as well. And I believe the other BRICS have been a buyer as well, although I have no obvious proof. But what's happened is what used to be on COMEX and LBMA going back and forth, right, based on demand, there's now a third player. And who's the third player? Well, it's, on the face of it, it's Shanghai, it's Hong Kong, it's basically Asia, and it's the BRICS. And wherever that silver is, it's not here anymore. And you can't ask for, there's maybe only one deeper pocket than China in buying silver right now, and that would be the U.S. government. So, it's going from weaker hands to very, very strong hands. To the point, the metal, where's it going to come from to fill the COMEX back up? It's not. It's gone. That's gone. The metal's gone. So I think the COMEX is on its last legs as a physical warehouse.
Yeah, interesting you mentioned that, because while we've seen the registered stockpile stay flat over the past couple of months, here are the eligible stocks, and seen that come down quite a bit. So down to just at 240 million ounces. And again, obviously not registered for delivery, but more metal leaving the overall complex. So certainly we will keep an eye on that. Another thing coming up to keep an eye on, we do have the silver options expiration next week. And I thought it might be helpful if we take a look at the options board here and you could share your thoughts.
Sure.
And this is a bit of an inexact science, but we see over here is the open interest, which generally is what the banks are writing the options on the short side. So you see at the 24 level, 1663, up at the 25 level, a big number of 2181. And again, for people who are maybe a little bit newer to options, if someone is short that 25 call, and that's a rather large number there, they don't have to pay anything out if it's over 25. And we see at the 26 level, 977, taking a look at the put side, we see 1100 at the 24 strike, not as much at the 25 strike, which at least as a rough analysis would suggest that if someone were able to push or spoof prices to a certain point, seems like 24 would be a sweet spot. And certainly this 2000 contract open interest, 2200 on the 25 strike, would suggest that at least if things go to the historical trend, we're basically unlikely to see silver above $25 by next Tuesday's option expiration.
Yes. Fortunately, I have a lot of experience. That's a really good explanation. Unfortunately, I have a lot of experience with this, and I think it does help to let people know how this operates. Generally speaking, as you said, the banks are sellers of options, right? So think of them as well, they're deep-pocketed players, so they can afford to sell options, whether it be naked. We're not even getting into the manipulation thing. It all exists, but I'm talking about as a normal behavior. They're going to sell calls, and speculators are going to buy them. And as the market rallies, speculators are more likely to sell calls. Professional people like myself that are undercapitalized compared to banks, we don't sell the calls out, we sell futures. So when it gets above 25, we're future sellers because we're hedging gamma, we're hedging delta, like you and I used to do. The banks don't care. They can just sell more futures because they want to keep the market in a range around 25. So the net result, and as you said, it's an art more than a science, is the largest open interest matters the most, first of all. And then second of all, we go to the largest open interest with the largest gravitational pull. So with a month left, it could be anything within $4, right? With a week left, it's whatever's closest within 50 cents. So it's kind of like if you were trading expiration tomorrow, if expiration was tomorrow, and the market was trading 24.60, you would be long, expecting it to go to 2,500 and stop dead because the banks will lean on the market, and people like myself will lean on the market because we're natural sellers. When the market rallies, we take profits. If the market were to slip below 24.60 to say 24.50, 24.40, then all of a sudden, all these players like myself, that are long the 25 call, we are not buyers of futures as it drops, not now, and not at expiration. But now you've got people that, like the banks that are usually long puts, they're going to be not buyers as well. They're going to be interested in letting it go down. So essentially, as you approach expiration day, the larger the open interest, the more gravitational pull you get. And I would say if gold stays around 2,000, then silver will be around 2,500. So the trade is, as a speculator, right, as a condor speculator, is we're out there selling the 24, 25, buying the 24, 25, 26 butterfly because we think it'll be near 25. However, you, right, Chris, you might think we're going closer to 24. So maybe you're just selling the 25, 26 call spread and buying the 24, 20, 23 put spread. I don't know. But the bottom line is we're not going to be anywhere above 25 unless gold really cracks higher. The other thing is people talk about gamma squeezes. You hear that on zero hedge a lot. And those will apply to metals, not yet. Right now, the strong hands are short and the weak hands are long. Weak meaning undercapitalized, more fragmented. But as time goes on, as silver becomes more democratized at the investor level, at the speculator level, not the investor level, you're going to see that power shift change, and the options will be in the hands of more and more people that don't care and will run right through 25 and 26, but not yet. We're not there yet.
All right. Well, certainly something to keep an eye on over the next week. And I guess next Monday will be interesting when you have your show. We'll see where things stand. Might add, we're going to be taking some questions for Vince, so feel free to type those in. We did already have one from Beatrix, and I think this is a good question that might apply in some form to many people. She mentions that I'm a housewife that's been stacking a few years, husband working 16 hours a day to pay off all debt. Do you think my stacking is worth it? Not very knowledgeable or confident because people mock me constantly. I think that's something that perhaps everyone who's been in gold and silver for a long time has experienced at various points. It's not as mainstream or popular to be looking at gold and silver yet. Has not been as popular to be looking at some of the banking issues which have started to pop up, and a lot of people in the mainstream look to the Fed, who has not really had the most accurate track record as well. So what could you say to Beatrix there?
Well, Beatrix, I think it's a welcome to the show, bloodied but unbowed, or bloodied but not broken. But on a more practical level, if you ever have any, if you're ever reticent or concerned that maybe you shouldn't be doing it anymore, here's a couple things to keep in mind. The first thing is, if you're buying silver and gold as a speculation, which you're not, you're wrong, right? If you're buying silver and gold, this may be hard to hear, but if you're buying silver and gold as an investment, you're also not thinking about it right. You're right to buy it, because an investment is a stock or a bond, something you expect to get income off of. When you buy silver and gold, it's insurance. And so you should only buy it with money that you can afford to spend, number one. It shouldn't be leveraged, number two. So it sounds like you're doing those things properly. And number three, when it goes up in value, you won't feel like you have enough. So what I mean by that is it will do its job when everyone else's house is on fire. You will have fire insurance. That's really what it's about. So if your financial situation, I'm speaking to you as a financial advisor. I'm not advising now, but this is, if you have 90 days cash liquid, 90 days of expenses liquid, and you're gainfully employed, and it sounds like you and your husband are doubly gainfully employed, then you're doing the right thing. You have to have 10, maybe 10 years ago, I would have said 5%, but the number is like 10 or 15% in precious metals now, simply because stocks are going to deflate at a much greater rate going through the next 10 years than silver and gold. If you have 90 days of cash for expenses and you're gainfully employed, then 10% of your excess cash in precious metals is not ridiculous. And to do that on a weekly or monthly basis is fine. And just ignore them because they don't know what they're talking about. I do. Here, I'll give you a real, here's something for you. These are coins that my grandfather gave me. Every Christmas, he would hang these bags on a tree, and we would all get a bag with a couple coins in it. And he did that because when he came over from Italy, leaving Mussolini, he came over and said, you know what? These coins are made of silver. As soon as they started making them out of mixed metal, he started taking them. Well, that's what's happening now. So on that note, that metal will never be in circulation again. So what you're doing is you're preserving wealth the way my grandfather did. So, I have some serious money because of that. Not that I'll sell it, but I do have it, and it makes things easier to deal with when the shit does hit the fan.
Alrighty.
Great.
Well, appreciate
Great
it.
grandfather.
Another comment that I see popping up in the chat quite a bit here. Someone says, where's my silver delivery? I've asked for weeks, gotten delayed shipping, purchased March 5th, still waiting. And I see a couple other folks have mentioned something to that effect. And certainly that's something that we've seen across the board, where a lot of the bullion dealers just being overwhelmed with orders, which is why they've put some of those minimums on there. Don't think necessarily running out of silver, but just in terms of a bottleneck of processing the orders. Obviously, I can't speak to that person's individual order, but that is something that is existing right now. So
Can I address that very specifically?
Sure.
As who asked that?
I would have to scroll.
You know his name?
Yami.
Okay, so here we go. I'm speaking to you as a person who's also waiting for an order, who's also very familiar with the industry, and I'm not being paid as I'm not going to say who I bought it from. Look, the precious metals coin industry is an old industry, and until recently, it was run by extremely frugal people in an industry that did not have any growth. People bought some coins, they didn't buy some coins. It was sleepy, right? So in the last 3 years, you've had an explosion, a gradual, kind of a geometric explosion in interest. And some of that is the advent of the internet, what have you. But you have a lot of these companies, and I'm not speaking about any individual company that comes on here or that you guys like, but a lot of these companies, because of the attrition of the industry, they cut back, right? So why do I have 50 people on a desk when all they're doing is taking orders from a screen? And so, and I'm speaking about one big firm in particular that I know very well. And so they cut back on staff. They ran bare bones, and I'm not talking about AppMex, but remember when AppMex was giving coins away? Basically, well, they're not doing that now because now they're making money. So for years, they were running bare bones. Fast forward to now, and they're just not able to scale up quickly on the labor side, right? Some of these guys are probably high integrity, using a fax machine with curly paper. Some of these guys are technologically advanced. You can order through the online, but they don't have enough back office people because they didn't have as many customers. It's not so much like they had 5 customers that bought every day or every week. Bang, bang, bang. Now they've got 1,000 customers buying at different times of the day, and it's really screwing them up. So the reason I'm comfortable and confident in saying that is because I put in an order 10 days ago and was told, well, let's put it this way. It wasn't an insignificant order for a retail person. And the explanation I got fits in exactly with what I told you. They're understaffed, they're overwhelmed, and it's not metal based. In fact, I think, didn't SD Bullion just say remember when we were talking about SD Bullion a couple of weeks ago? Oh, SD Bullion, they're raising their minimums. That's such nonsense, well, they just lowered their minimums again. So the bottom line is it's staff. So if you're worried about where your silver is, as long as your seller or your dealer is staying in contact with you, then everything's fine. That's it. It's no different than a delay in anything else being shipped.
Yeah, I'd agree with that. Obviously, checking in to find out the status of your order, probably the best thing you can do. Although, like you mentioned, Vince, I don't think that's unnormal, especially given the surge of demand that there's been since the banking issues. Andy Scheckman of Miles Franklin, he mentioned they had 12,000 new customers over the past month. So I can understand it might not be fun to have the delay, but it's not as if it's not something that is legitimately happening. So just wanted to pass that along. And Vince, we have a question here about something you and I were talking about earlier this morning. Robin Hooder asked why gold and silver markets are selling off as soon as the New York market opens. And actually, James Anderson of SD Bullion, who has a great channel over there, he had a video on Friday showing that silver would be 331.59 outside of COMEX trading hours over the last 50 plus years. So we've seen that trend of silver, if you just took the part where New York is open versus where they're not open, obviously a lot of selling on New York. I've heard people put forth plausible explanations that a lot of the companies that hedge, they're doing business in New York. But Vince, any thoughts on that trend that we have seen pretty pronounced over the past 50 years there?
Yeah. What James, look, anybody who runs a hedge fund knows that you buy, if you're a macro player in precious metals, you buy at the US close and you sell on the London Open. That's your time trade. And the reason for that is, here's the correct answer. Okay. There's more than one, I'm sure, but here's the correct answer. United States forever, not talking about the last 6 months, talking about the last 10 years, as James was pointing out. The United States has a vested interest in the dollar being the most important store of value on earth, dollar hedge money. And during US hours, everything in the market structure is skewed against a US human being buying silver and gold. So examples of that. If you buy silver and gold and take delivery, you can only use 50% of that towards a cash borrow. But if you buy a bond, you can use 100% of that. If you buy a stock, you can margin 100% of that. So that's the first thing. That's one reason to not buy silver and gold, right? If you're a hedge fund, right? Now, another reason is you have some of your money at a commodity house. You have some of your money at a financial stock house. Well, more and more money gets thrown into financial instruments. And that's just the domestic reasons. Internationally, we don't care because of if the US is the center of the, I can't say this eloquently, but price projection is the most important part of silver and gold. We're talking about it, right? So price is the marketing tool. If I'm trying to psychologically hinder investment in an asset, I will ensure that it does not trend higher during my hours. Now, I'm not an evil genius out there going, let me sell it. But I'll tell you, if I'm in London and the London hours open up and London is the bridge to the US, you're going to see the London market sell it down. And the reason that happened is because of something called the gold fix over years, which is not coincidentally the name of my publication. The gold fix was a 2 time a day fix, literally, and I don't mean that manipulative, not supposed to be anyway, of the gold price. And during London, everyone who traded gold traded US and London hours. So at 11:30, at 5:30 and 11:30, the price was set, and that will be how they carried on their books. And so the lower the price is, the less likely you are because you carried on your books. What's it worth? It's worth what it settled last night. What did it settle last night? It settled 1,800. Well, where did it trade? It should have 2,000, but it settled 1,800. Well, I can only borrow $1,800 or $900 against it. And so this is like, Chinese water torture. Over and over and over again, you learn not to be long gold during US hours. And you learn if you're going to be long gold, you be long it during Asian hours. They are not dissuading in China and India people from buying gold and silver. They're not. They want them to. Eventually, they're going to confiscate that wealth. In China, definitely. In India, I don't know how they'll do it, but they'll probably do it with taxes. In the US, we're already there. We're a developed nation. Everyone bought gold. Everyone bought silver. Now they want to make sure we don't buy any more. Put it in stocks. QE's coming, but don't put it in gold. Prices is coming, put it in. Inflation is going, put it in tips. And that has manifested in a very pronounced divergence between continents and how gold and silver trade. Another reason that the thing that James pointed out is true. In the US, the United States government carries gold on its own balance sheet at whatever it is, $35, right? In Europe, it's carried at a higher price. Europe, they carried, and I'm not saying that they use it at a higher price, but Europe will let the price float higher for their own mark to market, for their own balance sheet. So it's like we all own a house, let's say. I value my house at the price I bought it. Whenever I go to the bank for a loan, it's like, it's worth $100,000. I don't say it's worth $1 million, right? So I can't get as much money out. Forces me to be more responsible. In Europe, they care about the price because they borrow money against it. So that's the reason it happens, and that's the reason it will happen and continue to happen. What's changed, and it's easier to see in gold, is at 5:30 in the morning when London opens, if it's sold, that's because the bullion dealers know there's no buying in the US. If it's bought, that means there's buying in the US. So they're getting ahead of it. They're positioning for it. What I've been seeing lately is it's not always being slammed at 5:30 in the morning like it used to be, which implies that domestic US boomer demand, on the GLD SLV side is growing. So what James notes and what we've seen forever has been the same thing. You can actually take this, by the way, guys, if you take that concept of the US hours versus the rest of the world and you flip it for the S&P, all the gains are overnight, and during US hours, it's flat. So is that manipulation? Yes, it's manipulation. It's the market being bought by the banks that want to get it up. It goes up overnight and flat, right? For gold and silver, it goes up overnight and then down. So there's a reason for that. Anyway, that's a long-winded version of it, but that's how it works. It's going to keep doing that for a long time. You want to see gold and silver do well during US hours, then it'll be doing well in dollar terms. I mean, look at the math. Silver and gold are making all-time highs in every other currency but the dollar. There's a reason for that. I think you're muted.
Oh, sorry about that. Again, you can find that video that was on the SD Bullion channel, silver 331.59 outside of COMEX trading hours. Vince, one more question for me, and then I'll see if we have any more from the audience. Something you were writing about this morning, and again, we were talking about as well, the IMF unveils new global currency known as the Universal Monetary Unit to transform the world economy. Obviously sounds very exciting. The Universal Monetary Unit, also known as Unicoin, is an international central bank digital currency that has been designed to work in conjunction with all existing national currencies. Obviously, a lot of us are not particularly excited about the CBDC era, where if you buy too much steak during 1 month, your carbon score can be heating up the world, and conceivably the folks running the CBDC can say, all right, you're shut down. But anything that you'd like to touch on there with Unicoin?
Yeah, all the paranoia and fears, they're real. Like what you just described, that's real. I don't care who you are. You can't put that kind of absolute discretion in the hands of so few people, and that's the libertarian to be talking, and it's correct. It will be abused. But about this coin specifically, it's a shit coin. And what I mean by that, to use the crypto parlance, this is a coin that they've created This is what's going on, and they're trying to lay something over the top of it to make it make sense. The world, there's two worlds, right? There's the BRICS and the G7. The BRICS is going to use gold for international trade. They're going to, right? And they're going to use silver too. It just won't get the headline yet. In the West, they're going to maintain that they're using the dollar, right? If we have our way. But in order to trade internationally from east to west, you're going to have something that you can clap over the top of it, whether it be a piece of paper that says this is the equivalent of gold. So what you have happening now is Unicoin is a bank, and the bank will it's ridiculous. All right, let me just compose myself here. Okay, when ATMs came out, you may not remember this, but when ATMs came out, you would go to the ATM and your ATM would be free, and the other banks would cost you $1. Now it's $2, whatever it is. And then you started seeing these networks, Cirrus Plus, if you're in Manhattan, New York Cash Exchange, if you're Philadelphia, Mac, Tap Mac. Well, those became networks of teams, competing networks. So you had the IMF created their own little network. We approve this money, and we approve of them using our money. And they create these little fiefdoms, right? And before you know it, you've got Unicoin, which is an IMF, and you'll have something else by the WEF, and you'll have something else on the BRIC side, like Mbridge, and then you'll have something else on the US called the FedCoin. And all these little networks, they'll compete. And eventually, even if it's perfect, all they're going to do is they're going to start communicating with each other and charging you a fee for bridging one to the other. So Unicoin will be the American Express traveler's check if you want to go to Europe or something like that. This will do horribly. This is a red herring. It's their first attempt at it, and it's a piece of crap. It's not really well thought out. I'm not even an expert on this, but I know as much or more than they do. It is a step forward in maintaining the global unity of power. It is not, it's a panic play. Let's put it that way. I can't believe that they're announcing this stuff right now, but they're trying to replace things like Bitcoin and other cryptos and dissuade people from remonetizing silver and gold. So, but this is the beginning, not the end. It's the beginning. There's gonna be a lot of these.
All righty. We have a few final questions coming in. One is from DJ DZ. And Vince, I think you already answered this, but he says right now, at what price do you buy silver at? And you mentioned that you were recently a buyer of some physical, but anything else?
Well, I'll tell the price that I bought. As an owner, right? Because I don't say the word investor when it comes to silver. I bought at 25. Before that, I bought at 24. Now, that's not me telling you to buy it at those prices. That's me telling you, I'll tell you what I did. I bought it at 18 and wrote it to 22 and then got out and said, I have my profits. And then I took those profits and I bought at 24. I bought at 25. So I'm looking at it as I speculate. This is how I do it. I speculate, it gets in, I make money, and then I roll it into physical. And that's how I do it. Anyone who gives you a price to buy at is speaking technically or fundamentally. And I can do both, but I don't do my own transactions based on that. So I'll tell you why I bought silver at 24. I bought silver at 24 because people were buying gold. That's it. I'm like, okay, gold's being remonetized. I'm going to buy silver because I'll get more bang for my buck as a trade. And I'm not going to trade, I'm going to hold it. At 25, when I bought like 2 weeks ago, I bought because I have X amount of money allocated to buy this year. And I sensed that gold was going to have more bids going down than normal. So I put in 1/3 of X just to do it. If it goes up, I'll be miserable I didn't buy more. If it goes down, I'll be miserable that I bought it all. But that's the whole point. The whole point is to dollar cost average. And I dollar cost average a different way than most. Hope that helps.
All righty. And we have a question from the Yuha that is actually touching on something that you've written about quite a bit. When will Russia back their money with gold, or are they going to do it? We've heard a lot of commentary. They did that brief backing last year after the invasion of Ukraine. But what's your latest thoughts on what's going on in Russia?
It's really dangerous to look to them to be in any way, shape, or form a savior or a bull driver behind gold. And I'll tell you why. Backing behind gold is not pegging to gold. Backing behind gold does not guarantee convertibility. Words, and I'm not being short with the questioner, but words have meanings, and salesmen and marketers throw them out there. The ruble is back. No, it's not. It's not back. The ruble is no, it's not. It's not, right? To be backed by gold means that for every ruble you have gold, right? To be pegged to gold means that every time the price goes to a certain level, you will sell gold and buy rubles, right? So to be convertible into gold is something entirely different. So the Swiss franc for decades after everyone else had gone off the gold standard was still tied to gold, but you weren't converting it into gold. They were just telling you, we have this much gold on hand at all times, and that added stability to their currency. And the reason I say it's a double-edged sword is because, gold went up when Russia made their announcement about the ruble. I call it a soft peg, right? A soft backing. Well, the bottom line is gold went up not because they said it, but they were buying when they said that. They were buying at 1,600, 1,700, as high as 1,800. Now, when the price got to 1,900, they sold some. They sold some because they need money. And I'm not saying gold, silver, they need currency. That's the right word. They need currency to pay their citizens. So they sell oil when it's at $100 and they get paid in gold. And then they take that gold and they hold it. And then, and this is, you can look this up. This is what happened. In the last quarter, because oil dropped, they weren't pulling in as much money selling oil. So they had to liquidate some hard assets so they could pay their citizens, so they could run their economy, so they could pay their bills. So they liquidated some gold and China bought it, which is a great thing. That's a great thing. But they did that to get metal. What I'm getting at here is we have an inflationary problem. They have a deflationary problem. If you're looking for Russia to back their currency by gold 100%, it's a disaster. If they do that, all the gold will leave Russia. You can't do it because Russia's not a well-run country. Now, I'm not saying that we're great, but Russia's not a well-run economy. And because Russia's not a well-run economy, by that I mean too much of their revenues come from selling oil. What happens to the price of gold if the price of oil goes to $2? If you're a Russian, it's like, oh shit, I have to sell all my gold because I have to go, buy the G.I. Joe of the Kung Fu Grip, whatever that is. The point is, to use the old expression, the point is, it's a double-edged sword. And if the U.S. has its way, it's going to crush Russia's economy over the long term, right? And in doing so, they will have to sell more gold. And in doing that, they'll depress the price. So I don't think you're going to see at the human or retail or individual citizen level convertibility of gold by any currency anymore. You will see it internationally for international trade. So focusing on Russia is the wrong thing to do. I'm not saying you're wrong, but I am saying that the whole BRICS region is all accumulating gold every time it drops because they need to get off the dollar. I mean, if they could buy real estate in dollars, they would, but they don't want to own American real estate. They want to own something else to get out of their dollars, and they're buying gold, and that's what they're buying, and they will continue to do that, and they're also buying a shit ton of silver. It's just not as well advertised. So while Russia is too much to hang our hopes on, you need to look at the whole BRICS region and say that in the future, when the East and West start renegotiating, metals will be on the table as part of the money. Because if not, there will be no business. Hope that helps.
All righty. And the last question we have here is coming in from Justin, who apparently he wants me to be a little more active, so I'll get my prices right celebration as I get called down. And but aside from that, then to a more somber note, his actual question here, Vince, with poverty as high as it is, do you see people being forced to sell gold and silver, perhaps as we go into recession and have some of these issues that unfortunately are what have led people to buy gold and silver as some of those play out? Do you see a lot of people selling their gold and silver?
Yes, people at the a lot. I don't know what a lot means, but yes, at the margin. I'll give you something specific to look at. Us, people like us, are not going to, because we're not buying it with debt. We're not buying it on margin. We're not some speculative fund. However, there will be physical people that sell it. So let's say you have a community of like 500 silver people. There's going to be a point where people on the fringe who got in late, or people don't really understand it the way we do, are going to sell, and they will start a cascade. And that's not going to be a cascade you see in the market. You're going to see premiums come in. You're going to see things like that. There's going to be a supply that hits the market. Should you worry about that? No, it's nothing. It's nothing. But here's when it will happen. I'll tell you when it will happen. It'll happen when you see unemployment start to tick up significantly, and the Fed is having their way, more people are getting laid off, more people are getting fired. Then you know that the velocity of money is slowing down, and people like Russia will have to say, I need to buy bread, which will still be high in price, and they'll sell their valuable things. Do I think it's a big problem? No, but in general, you will have moments like that. So when stocks drop, because of unemployment increasing and the Fed still not being able to lower rates, you will see silver and gold drop. You will see coin dealers that are poorly run go out of business. You will see fire sales, but these are like estate sales. It's not a trend in the industry. You're not going to see a protracted sale of precious metals because there are too many damn people buying it now.
All right. Well, that makes a lot of sense. And here, one more for the fans here, right? Since we're speaking of prices, right?
Oh, here we go.
Remember the old celebrations there. So Justin, I'll try and channel that a little bit more for you in the next episode. Vince, any final thoughts? And perhaps you could let people know about the Goldfix Substack, where they can find your writing and all the things that you cover on a daily basis.
Sure. Final note is again, I'm reacclimating myself with the mining industry, the stocks. And I know between now and mid-May, you're going to have a lot more earnings coming out. So it's earnings seasons for the miners. And I would say that to mining stock owners, as I'm starting at the very broad area before I pick on stocks that I like and know, is that this time of year, the AISC, which is the all-in sustainability cost for metal, have jumped significantly. And because of that, as the earnings come out, you're going to see less free cash flow. On top of that, that's because even though prices have gone up, cost inputs have gone up as well because of energy. And that means you probably won't see too many increases in dividends or great news coming out. And that's one of the reasons that the mining companies have probably underperformed in this most recent run-up. That said, they're still well off their lows. And I think that the mining industry I'm looking at it closer now. And I think any drop in energy prices where gold doesn't hit, miners are going to do very well. So I hope that helps. I'll send you that report as well, Chris. The Substack we're writing about a lot of things. Today we wrote about tokenized gold and silver and what'll happen. And that's basically NFTs or what have you, or PAX gold or whatever it's called. Then we have a little technical broadcast there for active traders. So once a week we put out a very large post, and then during the week we'll put out anything we find on gold that you're not going to find anywhere else, and silver, obviously. It's been about gold for last month or so. But yeah, that's it. I mean, if you join and subscribe, try for a week, see what you think, or just sign up for free, have some fun.
Well, appreciate that. And you sure cover the markets pretty thoroughly in there. You send out a couple pieces per day, and happy to be a subscriber. And people can find the link to that in the description field below. So Vince of Echo Bay Partners and Goldfix Substack, Vince, the Professor Lanci. Appreciate you joining us again on Monday to dig through some of the things that are going on. Interesting times out there in the world, but fortunate to have an expert like you on the show, and appreciate that. And we'll just look forward. Hope people have a great week with whatever they're out there doing and staying peaceful. And Vince, we will look forward to seeing you again next Monday.
Yeah, great audience. Good questions. Thank you very much for having me on, Chris.
All right. Well, thank you.